We've been pretty good on this thing. Okay, I look at stuff on a long term. Well, should I introduce myself? I'm Jim, the option professor. I've been doing this for decades, and I've done seminar for thousands of people, and I've traded thousands of options and millions of dollars in stock. So at the end of the day, I'm going to share with you my opinions. And basically, that's all I'm doing is sharing my opinions. I'm not giving it out any advice. That's for you and your broker who knows all about you, and I don't know all about you. Okay, so again, I'm going to share with you my expertise on this stuff, and let's start in. With regards to the S&P, we have been feeling that we're at a very big juncture. So what I've been saying in my updates is if we break under 41.75 and 42.25, this thing could go down very, very badly. So again, if you start seeing it breaking under that neighborhood, the odds of possibly a hard landing is going to increase very dramatically. Hard landing, really, the hints are all around us. 28-year low in real estate sales, 8% on the mortgages, P ratios up in the 20s, some good earnings and bad price action on the stocks. Again, my theme that I've been telling people is, high interest rates is gravity for asset prices. Now, that doesn't have to happen overnight, but, things that don't make sense don't really last. And 8% mortgages and real estate going up doesn't really sound like it makes sense. And the credit card stuff's getting nutty. People are living this fast life that costs so much to do, right? I mean, you go out to eat, it's $200. You go out and get a pretzel, like Cooperman was saying, and it's $15 for a pretzel. And, how long is that going to keep going? So the way it keeps going is people use their credit cards, and Discover told you today that they're not paying on their credit cards. So their loss reserves are really big. So the bottom line is we've been very good at this because we play for the rallies, but we don't get married to them. And we also were looking for reversion to the mean, which we exactly saw there. And we do use our shorter term charts to give us signals, but this is the big picture. And the reason these averages are so good, I think, is because they speak for themselves. This is a long-term graph, and it told you to stay in the stock market all the way, and the red line turns down at 4,400. Now it's back on the upside. So I'm not bearish right here. If it holds this neighborhood, it could surprise everybody on the upside. But like Morgan Stanley, it can break down underneath this pretty easily. And with the 10-year going over 5%, that would be the recipe to possibly break the dam. And I don't know how you feel about Jerome Powell, but he looks like he's got a faraway look in his eye. And the money supply is starting to go up. Money supply growth was plus 26% in 2021, and then they brought it, and that's how you got inflation, and that's how you got 4,800 on the S&P. Zero interest rates and printing money. Now, totally different story. Money supply collapsed to April's low of minus 4.84%, and now it's on the up round. So these guys may be planning on easing money and credit on any problem, and that's why the gold's getting ready to go maybe through a crazy number if that's the plan they have. But, they said they were going to bring inflation down to 2%. They say there was going to be some pain involved. But other than if you own bad, lousy stocks, there hasn't been that much pain because people are still working and they're out there spending. Look at the retail sales report. All right. So that was my 4 minutes to tell you that don't get too bearish right here because this is the support zone. So monitor it and see if it'll hold. But if it does break the dam here, be prepared for what could be a precipitous drop to a much lower level and a hard landing and a recession possibility. Right now, it's holding. But I'm telling you, if storm clouds are right around your corner, you should at least get a raincoat handy, right? Okay, so let's go find out what you guys have for stocks. And that's what we're supposed to be doing here. So let's do what we're supposed to be doing here. All right. Do you actually trade options on the ES? Of course. But I actually like doing individual stocks because the index options seem to be very heavy, whereas the individual stock options seem to be much more reasonable. Give you an idea, if you try to do options on XOP or XLE or OIH, those options are going to be huge. But when I thought Exxon was topping at 120, my evidence was telling me to get on the put side once it broke under 118, and it went all the way down to 105. Those options were peanuts, and they went to cashews. Sometimes these options on the indexes are excessively high. So that's just my personal feeling. I like to risk a little and make a lot. So the bottom line is that when the premiums are lower, and if you can still catch good volatility, I like the risk reward on the individual stock sometimes better. But obviously, I've been doing this for 40 years and I've traded thousands and thousands of contracts. So I certainly have traded S&P options before. In fact, I used to trade the S&P index option on spreads and move about 2,000 contracts at a time. So I would say, yes, I have traded the S&P before. Okay. If you have any other questions on S&P, just put them on up there. Now let's talk about US Steel, which has been one of my favorites, and I got in there in the 20s. I'll show you why. So you put up the US Steel here, and well, before let me just finish my thought on the S&P, because if the S&P tanks, the whole thing's going down. It's not like Russell's going up if the S&P goes in the toilet. So let's get some numbers here for you to hang your hat on. Okay. And again, I'm not bearish down in this neighborhood because I showed you 42.35 area is a very important zone. And underneath that is 41.75, 41.80. So, it could very well be scaring everybody out before it turns around. But, you don't catch falling knives. And the last couple of days is definitely falling knives. So where's your support here? You want this baby to hold 42.89. It's at 42.93. So you're right there. You want it to hold right in this neighborhood. On the 1 year, you'd like to, again, it's under the purple line. That's not a good thing. And the red line is turning over. That's not a good thing. The blue line's pointing down as well. Green line's pointing straight down. So it's not a great setup. But that doesn't mean it can't stop and start going back up. But, you want this thing back above 43.56, 43.60, and then you definitely want it above 43.97, and then you want it above 44.12. If you can get all those things to happen, great. But I'll tell you something about RSI. Once it breaks 40, you can accelerate to the downside sometimes. And if you notice from yesterday, Wednesday, RSI was at 43, and now we broke 40. And can you see it's starting to accelerate to the downside? So I very much have my own opinions on how you play with RSI and moving averages. And at the end of the broadcast, I'll explain how you can get a hold of me and we can share that information. But anyway, there is some risk of it really accelerating now to the downside because that RSI did break 40. And so, this is a dangerous neighborhood. It could be the support zone that holds down in this neighborhood, right? Okay, and it could just scare people out and then go right back up. But you're going to probably have some. You're probably going to have some. And the VIX went above 20 and closed at 21. So if you're going to have a scary time, you're stared in the face, and then the guys in Washington are playing spitball or whatever they do down there. All right, let's talk about X, which is not the old thing. Okay, so anyway, starting out with the 20-year, here's how I saw it. You see, that's a rounding bottom, right? Rounding bottom. And you can see it's holding the blue line. Very nice, very nice. So I'm buying against that blue line. Then it gets above the red line, and then the red line's pointing up. So this thing was a buy anywhere in the 22 area to the 24 area. And when it goes to 32 on the buyout offer for Cleveland Cliffs, you're making good hay there. Now, this is an infrastructure play too. If it gets above 40, there's a lot of accelerations to the upside that could happen. But again, it is having a hard time getting above 60 on RSI. And my experience is if it can't get above 60, it's hit a top. If it gets through 60, it could accelerate to the upside. So I would probably like to see this thing make some new highs and then jump on a train that's running, because this train may have hit its station already. Because again, that RSI is still having a hard time getting through 60. Let's look at the 5-year here. Okay, you got a big gap there, and let's see if you have a divergence. You got 64 there, and you got 63 there. Not much of one, but a little bit of one. So you got a tiny divergence, and you got an RSI, you got the moving average at 30, and you got a gap to fill. So, this thing starts breaking. Let's see what the 1 year is telling us. Yeah, you got a high point here of 74, a high point here of 65. That's a divergence. This thing looks like it's coming down. And the bottom line is we know there's a gap, so you got an attractor there as well. And of course, the way things are looking out there in the world being so wild, and again, we're, when this October timeframe, people say, well, October's normally a good month. Well, there was 1 month in 87, it wasn't such a good month. And I happen to remember that vividly. So, I wouldn't hold my hat on that 100%. I think after next week, you'll have a better idea once these tech firms announce. So US Steel, like I say, to me, it has a divergence, and that's why it's pulled back from 34 to 32. And if it breaks 32, then you got the gap here, you got the air pocket, and maybe it'll do its homework down here. If the whole market tanks, obviously this thing's going to be in trouble. Again, right now, it is holding the support. Where's that at? It's at 31.89. So it's right there. and your RSI is at around 48. You don't want this thing going well into the 50, going well into the 40s. So if it breaks there, you're going to have RSI into the 40s. If it goes into the 40s RSI and then breaks 40 and goes into the 30s, then you can accelerate to the downside and get a full completion of filling that gap. Okay. All right. So there's your story on the lovely US Steel. Now you've got UVXY. UVXY. What would I do here, in my opinion? I'm not a big fan of this stuff, and here's why I'm not. I wasn't a big fan on, opening a wallet with Bitcoin in it, because you know what? If you ask straight questions and you get crooked answers, you probably want to get out of there, right? So when I ask exactly how do they figure this thing, exactly how they do the pricing, and I get a lot of crooked answers, not from the people who run it, but people who don't know anything about it, I guess. Now, the purple line has been telling you this thing is in trouble for a long time. So any buying you're doing, you're buying against a major flow going down. Can you have a reversion to the mean like you did in March? Of course you could. Is it trying to do that now? Maybe. Again, this is 2 times for a short future, so obviously it's doing better lately. And if we do break the dam at 41.75, you're going to hit a home run. You'll probably go up and test that purple line, which is where? 24. So you probably got a $5 move on this thing if we break 41.75. Okay, so you're gonna live and die by the sword with this thing. It's either gonna hold 41.75 and 42.35 and go back up because everyone's getting very negative right now. The VIX is getting high, or the VIX is gonna blow out to 30 and this thing's gonna blow to 24. So it's gonna be a feast or famine deal. And you should have already been in it, I guess, because if I look at the monthly, I got the buy signal down here at 15.50. So why you'd be buying it at 19 means you're, the guy who comes to the party, after 5 hours of the party. You know what I mean? So where you get in is very important. Great place to get in, 15. Great place to get back in at 16.50. You see how they violate the line, but it never points down? That's called a scam. And that's why you use limited risk options, so you can grit your teeth. So you have limited risk, and when they try to ruin the trend, but they can't, you don't have margin calls or forced liquidations. That's why I like the limited risk options. Okay, RBLX. Well, I heard Harry talk about it. I hate to violate anything that Harry said because I have a lot of respect for Harry. And so let's see what I say and match it up to what Harry said. Probably somewhat nearby because, he didn't like to fight the tape any more than I do. All right, so if you go to the 20-year graph, you're not going to find much information because it's a new company. You go to the 5-year graph, you're still not going to get too much on it because it's a new company. So now you go to the 1-year graph, and here's what you got. Okay, the purple line's been telling you that the party's over since when? Since 40. So that's like, I don't know if it's like an Okeechobee cloud or whatever they call it, but to me, it's called ominous. Now, down here, you had 24. Down here, you had 43. So there you got your buy signal. Jumps above 40, jumps above the red line, which means 27. And so you're long this thing at 27, and you're still long, right? It tried to turn things down a little bit, but I don't want this thing under for $30.68. That would not make me happy. If it does that, you could go back to the mean, and the mean's down here at what? 28, 29 bucks. Call it 29 bucks. And of course, right now you've got a high point there and you got a high point there and you got a divergence. So that's not good. Let's look at the monthly. And then you got a high point here and you got a high point there. And that's not that great. So again, you hang in there, but you're using that 30 and change area that I talked to you about. And clearly if it starts breaking under the 30-50 area and you get that red line pointing down, and then if it ever gets under the purple, then it's probably game, set, match. So again, when should you have bought it? When it started turning up, in the last month, down at 26, 25, 26. You want to get in here now? Well, you're only getting in at the highest price it's been at. Good luck to you. Could work out. Not my cup of tea. I like to get in when it's low and turning up. Or maybe if it has a correction like this and then get in there 30-50 or something like that. But even then, I don't like something that's going up. I'd rather find something that is in, the initial stages. But again, the purple lines underneath it, that's a positive. It's trading above red and green, that's a positive. Red's turning up, that's not bad. It would be nice if it got above red and green, because if this thing starts tanking under 30-50, then green will be pointing down and blue will be pointing down and red will be pointing down. And then if it takes 29.50 out, then you're in the soup. You're back in the soup. So again, not the greatest time in the world to get into it, right? But there's no evidence that it is over yet. And so until you have evidence of it turning over, I would say that, you got some evidence that it could be running out of steam, no doubt about it. You got a purple line there that probably doesn't want it to get past it. And you got some possibility of it pulling back. But in my view, not a great place to make a decision. So, here's where you should make your decision. Remember I told you 25, 50, 26, this is where you make your decisions. And you'll make your decision when that red line points down or it starts hitting purple. That's where I make decisions, when it's a high probability area. That's how I think. Okay, because I'm not interested in losing money, and I don't have to trade. So if you have those two things on your mind, you're a pretty patient guy. And since there's 3,000 stocks out there, I don't have to trade roadblocks, do I? Okay, let's turn to gold. Now, we've been very good with gold, and I'm going to start out with the price of gold. And I'll tell you what we have seen in gold. And I'd like to do an assessment of it now too, because it's either getting ready to blow through 2,100 bucks or it's giving everybody in on another Fugazi, which means fraud, rally. So let's talk about it here. Why was I never thinking gold was going to follow through? Because our first high up here had an RSI of 83. Then we had another high in the RSI 60. And then remember I told you if you can't get through 60, it's not going to 70, which means it's probably a high point. Here you go 59, can't go through 60, probably a high point, right? And you got reversion to the mean both times. Now you have a little bit of a down flag, right? And it could be a big up pole coming. And the red line's pointing up, which is very nice. And we came back to the mean. Don't forget, when we're up here, the mean's down here, reversion to the mean, reversion to the mean. So again, I was all over this thing at 1835, 1840, because that's where the moving averages were, right? And they were all rising. So it looks great, right? So that's the neighborhood you should have been taking your action on gold, not at 1990. But if you find yourself wondering where it's going from now, obviously on this graph, it tells you very clearly, as long as it's, and I told people this once it broke out last week, you want to hold 1903. That's a rising moving average. So now it's 1907. Okay. Now let's go over to the 5-year. And again, there's a breakout point there, and there's all your support on the short term. Remember I said we wanted above 1905, 1907. Now you got some 1910 numbers there, and you got 1933 and 1935. The recent lows, I think, probably are in that 1900 area like I talked about right there. Now, again, the red's not pointing up. So if this baby starts getting underneath 1907, it could go right back into the soup. So that's why this neighborhood is very important. These lines are not turning way up right now. So that's why, but again, the purple is rising. It got tested and held. This is the neighborhood you want to be buying at. Okay. You want to buy after the fact. It's going to be a riskier deal, right? Okay. So now on the 1 year, again, this thing turned up, but look, all those averages are still not inverted to the upside. And so that makes me concerned that this thing, could maybe have some problem. Now the RSI here got through 60. And so that's why you had a nice little $40 jump, and it may continue. It's up tonight at 1998. But again, let's just see if we can see if there's any kind of, where's the RSI now on this baby? 56. You see, it's still not breaking above 60 yet. Okay, that's why I say if it breaks above 60 on the longer term graph, then this thing could really go. What about on the 20-year? Where's the RSI? 57, you see? It's going into that 60 number. Where did it peak last time? 60.59. Where did it peak last time? 60.59. Where is it trading now? 57. So, it may have trouble keep going because that 5% and better on the 10-year is an attractor. Gold didn't pay any interest. And, the dollar has not collapsed, I don't believe. We can look at that. But again, I trusted where I got bullish was 1835. I trusted down there. I'm not so trustful up here. I guess is that a good way of putting it? And so I would say, like I say, if you're in there, you've got your lines in the sands. If you go to the monthly graph, what's the minimum line in the sand? Let's see how we're doing here. RSI 88, RSI 78, RSI 80. Hard to say. Still strong. But again, a little bit extended on that. But again, certainly wouldn't short it up here, but you're extended from the mean, right? Extended from the mean, always a risk of what? Reverting to the mean, reverting to the mean. So the mean could be 1970 or 1965 or 1955. So on the short term, those are your lines in the sand if it does pull back. Okay. Again, like I say, I own some stuff in this stuff that I never sell. The reason I never sell is because, like I say, there is a possibility that things got hairy at some time. And of course, with all the debt out there and the paper currency in all these countries, and Argentina might be ditching the peso and going to the dollar. I mean, and the yen. I mean, come on, they print their own money, buy their own securities. How long can that game go on, right? The yen's, I think, hitting an all-time low or near it anyway. Okay, so again, looks good, and hopefully it'll keep going if you're in it. Okay, this is Moderna. And a lot of these drug companies have had trouble. I mean, Bristol Myers Squibb and Pfizer can't get out of their own way. So let's put, I think this is Moderna, as I recall. And it's a wild ride on Moderna. So you got to have a seatbelt, right? Okay, so go to the 20-year graph. I don't think it's been around that long. No, so let's go to the 5-year graph. And, things in big trouble. Yeah, I mean, this is a sector, these drug companies, are having trouble, except Lilly, who obviously people think has found a youth. You take this pill, you don't drink anymore. You take this pill, you look like Jack LaLanne, anybody who's old enough to know who he is. And then, of course, and maybe in 2 months, they start talking about side effects where your ears fall off. Who knows? So the bottom line, the news on Novo and this on Lilly are great, but these other guys are having a rough racket. All right, so let's see how rough it is. On the 5-year graph, you got 31, and now you got 30. So, maybe it's trying to slow down. On the 1-year graph, it's into the abyss. What I tell you about if it gets under 40 on RSI? So you're at 40, you're at 46. Then you go into the 30s, and look what happens. Okay. All right. So anyway, you're oversold down here. You got 29 there, and you got 23 there, but you got no divergence to hang your hat on. So if you like to stick your head into a buzzsaw or you like to, just stand in front of a freight train and hope it stops, that's what you're doing here. Go to the monthly graph. Where would I even, again, what's to say? The only thing I can say about this is it's set up for reversion to the mean. That's all the one positive thing I can say, but there's no evidence that has happened yet. All there is just lower lows, lower lows, lower lows. So watch it trade a little bit and see if some of these red lines will start turning up a little bit, and see if these relative strengths start showing that the thing's tapped out, because it's not showing that to me now. Again, where would I be doing my business on this thing? I'd be doing the shorting business I'd be doing my put business up at 102, not down here hoping against hope. Okay, Dow, DAL. All right, well, they're in trouble lately, I think. Yeah, they're in the toilet. Okay, so let's go. They've been around for a while. Let's see if they're in the big toilet or little toilet. Yeah, it looks like the big toilet a little bit. I don't know why they only go back 5 years, probably because they went bankrupt and changed their structure and some other financial mumbo jumbo. In fact, I think I knew a Delta pilot who got stiffed on his retirement, ended up doing cargo planes for Ethiopian Air. True story. Anyway, where are you here? You are on a 5-year graph. This thing obviously is at 50. This is called reversion to the mean and through the mean. So basically, this thing's pointing straight down, and it's getting oversold here, but it doesn't look good because everything's pointing down. And so we go to the 1 year. Is there anything positive to say here? No, again, it's another one of those. The only thing I can say positive is that it's a candidate for reversion to the mean, a candidate without any voters. You got 20 there, you got 30, and then you see if you get 20 and then 30, you get a pop. But if it's a downtrend, not a big pop. Now you got 28, and now you're down here at 26. Nothing good to say about it. And they say if you don't have anything good to say about it, don't say anything. So yeah, it doesn't look very good. If you go to the 1 month graph, where's the first sunlight? First sunlight is if it can start getting above what? That red line, which is at 33.65, and maybe it'll go fill the gap at 34.50 before it runs into 3 more storm clouds. You got any divergence here? 31 and there? No. So nothing good to say about Delta. Keep an eye on her. And when it actually has something good to say, then call me back. QQQ. Now, I heard a guy on CNBC who I thought was a sharp guy say that after the end of October, he was bullish on NASDAQ. Well, apparently he'll get a good price by the end of October, the way things are going, right? So anyway, there was an analyst who thought it might go up. So I might keep it on my radar to see if I find a turn, because maybe November will be a different month than October. And I saw that money supply going up, so maybe the Fed starts printing money and do things to stimulate things to go back up. I don't know how they would do that and hope that inflation goes down, but again, we've got QQQ. Let's go to the 20-year graph. Oh, has it been around? Yeah, there you go. So again, similar to the S&P, you can't get above 60 very far here. Get a little bit through it, and now you got your RSI under 60. So there's a reason why I thought the high on the 4,600 was going to be it, and a reversion to the mean. This one hasn't really reverted to the mean. Next week is obviously crunch day, because all the big guys are going to be announcing, and they don't have robust earnings like Netflix. And let's see if Netflix held its water. They came out with all that wonderful, we're hiking rates and we got subscribers and we're up a tremendous amount. So it was up good. Yeah, it held. It held. Still got some resistance over here. And that thing's still pointing down. So I don't know if I trust it. And after you go up 55 bucks, you should be up more than 21 cents in the aftermarket, wouldn't you think? Anyway, let's go back to what we were talking about, which is QQQ. And again, the semis have been having some trouble because I guess, the government doesn't want NVIDIA selling certain type of chips over there, modified chips. So there's that going on. Anyway, looking at the Qs, it could pull back to the support there. That's around 330. And then basically under there, it's the abyss, just like under 4175 on S&P would be the abyss. But the lines are pointing up, and that means it's still a bull situation. So I don't get bearish when the things are pointing up. Okay, but I don't get bullish up at 380 either. Okay, turn to the 5-year. What do you got? What you got is the thing's rolling over, not good. And if this thing starts trading underneath 365, which it is, that's not a good sign. It's going to be setting up the potential. And if it breaks the 360 area, which it is, you could go down and go to 340 and change, or you could go a full deal and come down to 320. On the 1 year, what do you got? You got under the blue, and now it's under the red. And if where's the RSI? 43. So I'll give you a combination sandwich here. Peanut butter and jelly. If the peanut butter, which is the price, goes underneath the purple line, which comes in at 356, and the jelly would be the RSI going from 43 into the 30s, you have a good shot at accelerating to the downside. That's it. And then, of course, if you start getting back above the red lines and all this stuff in the month of November, maybe the guy from Citigroup, who I thought was pretty smart, who thinks it's going up in November, he might be right. Right now, he's not very right. And he's going against the flow of traffic. Okay. So on the 1 month, when would it start looking better? See, as you can see, it gave up here because we had 69 and then we had 56. And if you have 69 and 56, it's going down. And once the red turns down, it's going down. Okay, now it's getting a little extended though, so we'll have to see. It's in crunch area, like I showed you, 360 neighborhood, very important. Gives up that 360 neighborhood, you got a 340 neighborhood possibility, right? Okay, so that's the story there. Let's turn to LNH. LNTH, I'm sorry. Not one that comes to my mind. I always love new things. So let's talk about Lantheus Holdings. And let's see how long they've been around. If I put a 5-year graph up, yeah, that's about it. Have they been around 20 years? Not really, but they've been around more than 5. So here you got 73 and there you got 70. That's a divergence, bam, down. Now you got the red line turning down, but it's holding green. A little too early to get, it's at a reversion to the mean. That's all it's done. Okay, so it's not like it's over. Okay, red line is telling you it might be over. Okay, so again, the longer it stays underneath 73 is not good for you. So you want it to get back above 73 sooner rather than later. So if it gets above 73, that would be a good night's sleep for you. If it breaks under 65 and the red starts really pointing down, then of course it'll open up the door for 50. Okay, so that's the story there. Right now, you could make a case for holding it as long as it stays above green, which is at 65. And I wouldn't put another dime into it until it could show me you can get back above 73 and stay there for a while. Because the only reason you want to be in it is you think it might go up towards 100, right? You're not in it for a penny or two, are you? You're day trading it, then we have to go to a different chart. 5-year graph, again, it held to purple. That's good. That's where you do your business. You want to buy something? Buy it at 60. Then when it jumps up to the blue, sell it at 75. Nice trade. Red line's pointing straight down. That's not good. And if it gets under 69.45, which it's doing right now, that's not good. And if it busts under 60, it could be sayonara. RSI right now, 44. What did I say? Breaks under 40, you could accelerate to the downside. Okay, that's the story on LNTH. Historically, might bounce back up. Anything else? I'd love to show you what I think here. So normally when the stock bottom at 20 RSI, the stock might bounce back up. No. I wouldn't say that at all. I'm in total disagreement with this statement. So normally when the stock bottom down to the 20 RSI, the stock might bounce back up. Now, again, I'm sharing my opinion tonight, and you know there's more than one out there. So my feeling is that doesn't mean anything to me. I have a way that I look at RSI, and I'm going to be inviting you guys to contact me, and we can have our nice conversation. And basically, you'll find out that I've got one of the great deals of all time that I'll talk about at the end of the broadcast as well. But no, I have my own philosophy on RSI, and the fact that it hits 20 is not that important to me. There's another relationship that's much more important, but it takes time to explain. What else do we have here? You got the LNTH, TSM. Okay. Yeah, this Bappa, who's asking the question, he's been trying to contact me, Bappa. So you can email me at optionprofessor@gmail.com your contact information, and I can give you more complete information. I know you've been trying to contact me, but for whatever reason, I'm having a hard time getting through to you. Okay, so do that after the broadcast. TSM, let's see. Now that was a semiconductor that was announcing all these lovely things going on, right? So that actually did pretty good. And again, you know, China and them, you know, maybe there's something that they'll spare the child here and let them make money. Let's talk about how long it's been around. A long time? Yeah, really long time. Okay, so on a long-term chart, what do I like about it? Red line's pointing up. Where do I want it staying above? $90.55. And then the green line's there. I'd like to see it pointing up. That's going to take time. And that would be above 92.91. So that's where it is right now. So it could stop right here because that green line's pointing down and 92.91 is where we are. So I'd watch this thing like a hawk. Let's see if there's any reason why they could stop here by looking quickly over to the monthly. Okay, you got a gap here. It could be filled. You had an RSI up here of 67 and you got one up here at 61. I'd say it's a possibility that we stop at 93 here and we go down and fill that gap. I'd watch that very closely. Yeah. Okay, let's get back to the long-term side of it. Again, you know, you get a buy against purple. That's a smart time to buy. Buy when it goes up at 80. That's a smart time to buy. Again, the blue is rising. So this thing will really fly if you can get above 100, because then that thing will take it up and this red will go up much more nice, you know, and the green might turn around. So closes above 100. If you plan on getting any wealth on this thing, you know, you need to see that. And then the bottom line, be careful here, because this 93 neighborhood, if it gives it up, there's a gap underneath. And then again, 90 is not that far, 90.55 not that far. So if you hold 93, break down under 90.55, again, you could see some more correction. So this is a very important neighborhood right around here. And then of course the next neighborhood is 100. Let's see what the 5-year looks like. Yeah, again, it's above purple, which is nice. What number is that at? 91. So I say 90, you want it above 90.55, you want it above 91, you know, and then of course the green line here comes in at 95, which was what? The high today, right? Or the high Monday, or the high for the week, I guess, 90.76, 94.76, right? Not coincidental. 95 is a resistance point. It's backed off from there. Now it popped up today. There you got the 36 at 92.89, right around the area we are now. So, you know, the way I'm reading it, This 93 neighborhood's important. If it breaks, you can go at 100 or better. If it doesn't and it goes down, you go down and fill that gap. And you get underneath 92.89, and then you get underneath 91 and change, and 90.50, then that will probably confirm that there's a correction coming. And again, if the longer it stays under the, like right now, who's controlling the market? It's been under the red, under the purple line. Well, first of all, what's above the purple, the bulls are controlling it. Underneath it, the bears are controlling it. It's been choppy now. It's starting to get kind of right around purple. So it's going to make a decision here. It's going to make a big decision, right? And the decision's either going to be it can't get into the promised land up here, and if it starts giving up, that red line's pointing straight down. And so if you take this thing out, obviously there's a lot of real estate down here that it could come down to. Okay, SLB, yeah. That's one that I've been around for a long time. After the crash in 2020, this is being given away like candy. Look at that, $15 a share for a company that does all the drill bits. What, are we not going to use oil? That's just a green story. You notice they're closing plants that they were planning on opening on EVs. I mean, you know, the EV thing, you know, you got to figure out how you're going to do the battery thing, you know, before you get everybody thinking they're going to go electric. You know, I went to the gas station one time and a guy had an electric Jaguar, and I go, how long does it take to fill that up? And the guy said, I just got back from lunch. I mean, you go to lunch to fill up your car? How many people are going to do that? So I haven't been a big green man like that, but you know, I'm also wasn't a Bitcoin guy, so I guess I miss all the popular stuff. I'm not thinking that AI is going to happen tomorrow either. So call me a rainmaker. Anyway, Schlumberger, let's go to the 20-year graph. Got a high point here, boom, 66. High point here, 64. Not good, but definitely an uptrend. And, you know, again, I liked it down here because that's when you're supposed to be buying, when it starts turning up and add against the line. Pulls the reversion to the mean, take your shot. Goes up, reversion to the mean, take your shot. Red line still pointing up, keep taking your shot. Red line starts pointing down, get the heck out. Again, you're a little bit above purple and a little bit above purple. But again, if this thing starts getting under 50 again, you know, that wouldn't be good for Schlumberger. And like I say, it does have a lot of real estate up here it can go. And the search for energy is probably going to be picking up because the reports on inventories on energy is very low. So there's no question there's a tightness out there. There's no question China's demand is huge. Why do you think he's meeting with Putin? Because he likes Russian? He likes vodka? He wants to have some borscht? No, he needs energy. He needs oil. The Chinese refineries are going at a record pace. So they're using energy, and you can forget about them in the green probably too. But the bottom line is you know, there's a lot of demand for energy, and the supplies are tight. And now we got Iran, and we got this and that going on. So, you know, people that can help you look for it, like Halliburton and Schlumberger and all those servicers, you know, they could have a bright future. And if this thing starts breaking above 60, 65, you could accelerate to the upside. Remember what I told you, as it gets through 60, it can start accelerating to the upside. So if this thing starts getting above 65 and that RSI kicks in, it'll accelerate to the upside. Other than that, this could be a high point. So that's why this is a very critical area after a very good run. And of course, oil's up there in the 90s again. So yeah, I mean, what does it look like? Let's go into shorter stuff. Okay. This thing here is at 64. This thing's at 60. This thing's at 59. See, it's running out of steam a little bit. We start breaking under the red line here. I would keep this on a leash, right? How about 58.72 for a leash? Not a bad leash. Okay. And then basically, again, if you start clearing this double high and you get these RSIs screaming into the towards 70, you know, this is going to have an acceleration to the upside. Sometimes a strangle is not the worst thing to do. Out of the money call, out of the money put, sit there and watch Rome burn or watch Rome celebrate. All right, let's talk about a 1 year. Again, you know, this thing did break down up at 61. And again, you know, you had, right now you got this RSI has been slipping, you know, still having a hard time getting above 60. So again, you start breaking under what? Yeah, this is another short leash, right? What did I say? High 58s, 558. You know, we got another spot here at 59.47. So, like I say, I see it as having a little bit of the engines running out of steam. But if we break through higher numbers, don't fight that tape, because once that RSI starts breaking into the 60s and then goes into the 70s, you could have a big acceleration phase. Right now, I'm a little suspicious. Red line is underneath all these other lines, so it's, it could be got ahead of itself, come back, hold the 58, 59 area where we know there's support there, or give it up. And here's where you're supposed to take your shot. Yeah, that's where you're supposed to take your shot. If you put it at 55, we wouldn't be having that conversation now. You'd just be worried about, am I going to keep making money or not? 1 month. Yep. Let's see. Is it running out of steam? A little bit running out of steam. Not a lot. A little bit. It's in the 50s now. Again, the red line ain't pointing down. So the red line ain't pointing down. You're not going to hear me talk bearish. So I'm suspicious of it, but I'm not bearish on it. And would it shock me if it blew out 62 and went to 72? No, it's set up for doing one or the other right now. Let's take a look at EURCHF. That's an awful lot of symbols. Does it actually come up to anything? EURCHF. Oh, the cross trade. Let's see if that tells me anything. I guess this is long euro, short Swiss, which has not been the place to be. Switzerland obviously, has their stuff together a lot better than the European Union. In fact, I just was in Italy, France, Corsica, and Sardinia, so I got up close and personal how things go. A lot of welfare over there, a lot of inflation over there, a lot of cranky people over there because the cost of living is getting out of hand. And their interest rates are way below ours. And so, they're having a hard time getting that genie back in the bottle. Okay, let's take a look here, though. What's it telling me? We're running out of steam. 13, 27, 25, 36. No, 25. It could be running out of steam. Again, this is another one where the best thing you can say about it is a reversion to the mean candidate. That's not the one that makes me run to the bank book and get the money out. You know what I mean? I like the ones where, they've had a big run up, they're turning over. I've got red under blue, I got blue under green, I got everything under purple, I got the RSI breaking under 40. That's when I run to get the checkbook. This stuff here is called, you need to get a new hobby. Let's see here. AVG, what is my given name? I was given the name James, and I took it. It was a gift, right? Okay, AVGO. AVGO. Now, this guy, I met a guy in the airport as I was traveling, and he worked for Avgo. He worked for Broadcom. And so I was wondering, I asked him, are you going to have the problems like other guys like Qualcomm have? And he says, no, he thought things were looking pretty good. But of course, that was in this month, so I should have just listened to him because it's gone from 8:30 up to 9:20. I don't know how he feels about it now. But again, the way I feel about it now, let's go back to the 20-year. And they don't go back that far. Let's go 5-year. Okay, this reminds me of Exxon, where it's at an all-time high and it just keeps going up there and testing it. So here's the problem. Here's why I'd be nervous. This is 81. And we go over here, it's at 71. Then we go over here and it's at 63. Now we're over here and it's at 61. This is like Exxon in that it is running out of steam. And the red line comes in right there at 852. So if it got under 850, guess what, 852, I would be thinking that it could have trouble. So 852 and the green line has been holding pretty good at 835. So maybe it could pull back just to those numbers if it's so strong, right? And then hold that area. Otherwise, it could open up the door for further reversion to the mean. Now I'm going to show you a little story about reversion. Well, let's finish this up. The 1-year graph is telling you that the RSIs were in the 60s, now they're in the 50s, and now they're in the low 50s. So it's like I told you, it's a thing that's running out of steam a bit. But there's no red line pointing down, so I'm not interested in being negative on it. Where would I like to buy it? Against the purple and not have this problem about trying to figure it out right here, hoping against hope this is just a pullback. There's a reason to stop there. What's the reason? The reason's 867. Because that's the SMA there. So this is a neighborhood where it could hold 850 to 867. But I don't like the fact that it's run out of steam. Okay, I'm going to show you a reversion to the mean that you probably will be shocked at. NVIDIA. All right, I'm going to go to the 20-year graph. This is why I was bearish at 500, okay? First of all, I always talk about reversion to the mean. When you're at 350, and every moving average is down here, and if I told you at 350 that it's going to go down and test 100 or 150, you're going to tell me I'm nuts, right? And at that point, I was nuts. I didn't have any evidence. But now you can see. Now, this high point on RSI is 87, and this high point is 77. That is a divergence. That means this thing is up on lighter strength. And I don't like lighter strength when you're 150 bucks higher than the last high. I don't care. We're going to use it in everything, ChatGPT. To be honest with you, this technology stuff is more annoying to me than anything else. Every time I click on a button, I'm interested in a ham sandwich, they send me 50,000 articles on pigs. If I say I might want to buy a shirt, I got 17,000 shirts, socks, ads coming at me. You call up somebody like Home Depot or some company, and you're dealing with a chat GBT kind of thing. Sometimes you can't get stuff done. So anyway, I'm just trying to show you things can happen. Things can happen. So when things get way out of line, be careful. You want to buy this stuff, you buy it down here at 200. It goes up here, you missed it. And if anything, you're starting to look for, is there a place to sell it? There was a place to sell it right up here at 480. And now there could have been another place to sell it at 455. And if you break under 400, and look at your RSI right now, right at 39. So you want to hear a scary story right before you go to bed. This thing starts breaking under 400 and that RSI goes into the 30s. This thing could go and fill this gap at 320. How do you like that? That would surprise some people, right? So again, I don't make up the numbers. I just follow them, and I'm not prejudiced. If they turn the other way, I change my tune. But I'm not going to sing a tune. I'm not going to sing country music at a rap concert. You know what I mean? I'm going to try to play the music that is appropriate from what I'm seeing. And again, some guy says if NVD is overcrowded, I think that's obvious statement since everybody I hear on TV. NVIDIA is just something you have to own. You just have to own it. You just have to own it. When I hear that after 30, 40 years, believe me, that's a red flag. At any rate, and they could be correct, but it's not going to be my cup of tea at 500 bucks with a weakening RSI. And would it cause a market crash? Well, if that breaks and Microsoft breaks and Apple breaks because they can't sell these i15s and the PE ratio is up at 25 and doesn't deserve to be, then it'll be, I'm sure NVIDIA will be part of the party that all goes down to, goes down the river. If that happens, if there's not evidence of that happening just yet. All right, do you recommend instead, first I don't recommend anything to people I never met, so I'm not recommending anything. Do you recommend instead trading a vertical spread with the SP within a 10-day out? You see, I don't lock myself into these like fixed things to do. I'm looking at the numbers. It's kind of like I'm looking at a patient. I'm not fixing that. I'm not going to pre-diagnose a patient, and I'm not going to pre-announce what I'm going to do with them. I got to look at the numbers. Would there be circumstances where I could consider that? Sure. Now, again, vertical spreads on the SPX, are you doing credit or debits? And then, okay, this is 0 days to expiration. Now, like I say, I like the buy side. I tell you, I got a lot of T-bills. I've been telling people buy those T-bills, stay in those T-bills. Again, what's the theme of me? My theme is high interest rates is gravity to asset prices. So what do I want to do? Have millions of dollars in there and then have the darn thing go in the toilet? I'm not old enough to make the money back. So anyway, but with 5.5% interest, you get a lot of money that you can do some trading with. So I'd rather buy limited risk options that don't cost much at a turning point and try to make a little bit of a home run. And if you do 5 of them and 3 work out, you probably do okay mathematically. These credit spreads, I'm sure they're lovely. I've done a million of them, not a million of them, but I've done thousands of them before. And yes, they have a high probability of winning. Yes, they have a lot of things working for them. Time's working for them. If they're out of the money, price is working for them. And again, time decay obviously in 0 days to expiration. But when you get whacked on them, you're going to get whacked pretty hard in the back of the head sometimes. And so at this point in my life, I'm not interested in a peanut and then losing a cashew. What I'm interested in is betting a peanut and getting a cashew. So the bottom line is I look and seek out short-term options that are at turning points. I'll give you a for instance. Want a for instance? Here's a first. Now, they all don't work out this way. Past performance is not indicative of future results and all those other disclosures that mean that this is just an example and is not something that happens every single time we trade. Okay, so anyway, here's what I like. ExxonMobil was at a 20-year thing. Remember I showed you that other graph where it's banging against the highs, but the RSI can't get through 60, right? Here we went up to right there at 71, and then we're at 66, and then we're at 69, and then we're at 61, and then we're at 61. And so I got the feeling this thing was running out of steam. So then I flip over to the 1-month graph. Okay, and then I see the RSI is up here, and then it's losing steam, and then it's losing steam, and then we get underneath the line here, and then basically I start looking at the short-term puts, maybe for this Friday or the following Friday at the most, and I start looking at just a little bit under the money. So now it's at this point it was at 117, so you're looking at 116, 114s, right? Now, when you get down here, you see the red line really pointing down, and then we were at 44. And once we broke purple, can you see you're in the 30s? And there's the acceleration to the downside. And that is the anatomy of a great trade, where you put up a little and you take out a lot. Doesn't always work that way because you always don't get the volatility and the market is not always trending. But when it does happen, you can get paid. And that's my idea of a good time. Let's see, anything else going on in the world up there? I don't think so. We got the SLB. Oh, it looks like we got pretty much everything covered. And it's getting to the top of the hour. So why don't I tell you guys how you could get a hold of me and we could have a much more lengthy conversation. Okay. I'm Jim, the option professor. You guys wanted to know my, I'm not like the artist formerly known as Prince, right? No. The option professor is what I've been doing, educating people for many, many, many years. I've done hundreds of seminars for thousands of people on the uses and risks of options and other investments as well. Since I've been in the game a long time, I know how bonds work, I know how currencies work, I know how the metals work, I know how they all work. And so I'm a fairly knowledgeable person in my opinion. So what a lot of people out there, you have to pay a lot of money nowadays, right? For everything, including financial information. And sometimes you pay a lot of money and then you don't get anything out of it, or it becomes actually you lose your money and you lost the education. So that's very bad. And I don't like to argue with people, so I set up something that is pretty much of a no-brainer. I have a link to my indicators, and I, at my own discretion, after I speak to somebody and make a judgment call, I will send you my link and spend an hour with you on the computer where we go over my interpretation of the things we're looking at today. And we will go over markets you trade and find out how this may have made a difference in the results in your trading. And obviously, if it is enhancing your result, and if in fact you think it has good value, at that point, we do ask that you pay a one-time only fee of 199 bucks, which is peanuts. Because again, you're going to be able to ask all your questions about options. You're going to be able to ask, you'll be able to understand how we figure market direction. You're going to be able to look at your stuff and see how you could do things differently. You look at your current stuff and see realistically, what are you holding? And then you have another way of verifying information rather than just running to the brokerage firm. When you hear news on somebody recommending something, you have a way of vetting whether that idea has already happened, is in a trend that looks like it will happen, or it looks like a crazy idea. And so this included into the other stuff you're doing should have value. And since I know there's value here, that's why I'm confident to give you the stuff up front and let you pay after the fact. And knowing that everyone's goosing everybody for thousands of dollars, I thought $199 was a very fair amount of money. Since I also go out to dinner, and it seems like $199 is about one dinner out. So one good dinner out with somebody who wants to have a high quality Cabernet Sauvignon, that's what it comes to. So $199 is a joke. The information I can provide, I think, is very valuable. And then, of course, you'll be the final arbiter of that. And I'll have a conversation with you where I can determine, again, that you're the kind of person that after I spent the time, gave you all the information. Again, if it means nothing to you, then obviously, we wouldn't have to spend an hour on the phone for you to figure that out. But I know that this stuff helps most people, and that's why I'm trying to present it to you in a way where you get the information, we have a conversation, we all take a deep breath. It's not about trying to grab your checkbook or your credit card and bill you every month. That's not the game. Okay. So it's different, right? Weird, right? Weird. Somebody actually doing something for you and then asking for money if you're happy. Very weird. But I'm not at a point where I want to go debating people over money. So 199 was my number. I don't want to debate people that they have to put the money up front and then find out if it's valuable to them. And I know that it's valuable. If it's not to you, that'll be the oddity. So again, that's how you do it. Now, how do you get a hold of me? Real simple. You can put your information in optionprofessor@gmail.com. OPTIONPROFESSOR.com. Put your information in there. I'll call you back. We'll have a conversation. We'll proceed. Want to go to optionprofessor.com? You can do the same thing. You want to ring me up? Ring me up at 702-873-8038. Again, 702-873-8038. Again, I'm Jim, the Option Professor. I'm trying to help people. And again, you get this stuff up front, and then you decide if you thought there was fair value. Again, I obviously am confident you'll find that, but if for whatever reason you don't, we can part ways. Okay. Obviously, I wouldn't keep doing this if most people were not doing it, right? So it's a good deal for everybody, and that's nice. It's a nice feeling. So have a good day. It's Thursday. Have a good weekend. I hope your college teams win. More importantly, I hope my college teams win. And you guys have a great day. It's been good talking to you. You've had a long day. Go out and enjoy something. All right. See you then. This is Jim, Option Professor, signing off. Have a great day.